Today, we're going to be talking about the reasons that you may have got declined a mortgage and what to do about it. We'll be discussing what to do when a lender hasn't told you why you've been declined for a mortgage and why that might be, and other key areas which may cause you to get declined, such as credit profile, affordability, and being furloughed. Hello and welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages, and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's podcast of Let's Talk Money and Mortgages, we have Iftika here with us. Iftika is a trained accountant and mortgage broker who has been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi Gemma, I'm well. It's lovely to be back.
It's lovely to have you back. So the first thing we wanted to discuss is affordability. Now, Ifti, where can people get it wrong with affordability, and why might this mean that their mortgage is declined?
Yeah, affordability is one of the most important things because most of the clients I deal with, they generally go to the max level of their mortgage. So if they get their affordability wrong, that means the mortgage is effectively not affordable. For me, affordable is like, it's three components. You look at your income, you look at your expenses, and you're looking at your commitments, right? So with income, a lot of people get it wrong. It's a common thing. When I ask a client, okay, how much do you earn? He or she says, I earn 25,000, right? 25,000 sometimes will include, say, 20,000 as salary and 5,000 as bonus. What a lot of people do is, like if they go direct to a bank, they just say, I earn 25,000, right? So the result can be different because banks look at bonuses and commissions in different ways. Some guaranteed bonuses, right? So they say, okay, 50% of your bonus is guaranteed, and the balance 50% depends on the performance of the company. So if you have that kind of breakup, you have to be very clear because bank looks at it in different ways. Also, on the income side, your pay slips sometimes can be very complicated, right? Now, this is something that a lot of people don't understand. I've got clients who work for multinationals, right? If you look at one of the leading banks, right, they have something called a flexible pay. So let's say, for example, somebody is earning 50,000, 10% of it is flexible pay. Now, flexible pay, that can be used for things like childcare. It can be used to invest in stocks of the company, right? So you have options to buy shares, and then you have options to pay for your gym membership, other options like pensions. So all those components, banks look at it in a different way. Quite often, if you ask that client, how much do you earn? He'll go, I earn 50,000, right? He's not talking about that flexible component, right? So you got to pick out the ones that the banks don't like. So if you get those wrong, your affordability is wrong, right? So that's from an income point of view. The second thing is your expenses. Usually banks assume that your expenses are the average expense, right? Everybody pays council tax, everybody has a mobile phone, everybody pays their utilities, right? So they expect all that to be normal. But suddenly you find some people have extraordinary sort of expenses, expensive hobbies, for example. Some people even do things like gambling, people go for nightclubs. Generally, banks don't consider expenses as a commitment. But if you have these extraordinary expenses and banks see these in your bank statements, your affordability can drop. So that's why as brokers, we look at bank statements. We want to make sure that the clients are actually saying what it is, right? Because last thing you want to do is apply to X bank and realize, oh, it's not affordable. And the third thing that you look at is your commitments, right? So commitments are things like loans, credit cards. If you have children, childcare, that can be a commitment as well. And things like private school fees, right? Clients are sometimes reluctant to send their credit reports. We insist that clients send because we need to get these numbers right, because the banks generally look at the credit report, right? What we find is clients forget some of these loans. Say, for example, they walked into a sofa store when they bought the house and they bought a sofa, say 3 years ago, right? They pay something like £40 a month. It's not massive amounts, but it's a commitment, right? So if you forget to put that, that goes as an undisclosed. So then your affordability drops. So that's why you got to look at things like income, expenses, as well as commitments in detail. The last thing you want is, set yourself up to buy a new house, go and commit yourself. You tell your friends and family, I'm buying a new house, and the banks come back saying, sorry, you can't borrow the money, right? I always sort of suggest you speak to someone like a broker and go through these things.
Yeah, and I think you just touched on it briefly, but the second thing that we wanted to discuss is a credit profile. And can you just go into a bit more detail about a credit profile and why that might mean you get declined for a mortgage?
Yes. Yeah, a credit profile is very, very important. As brokers, we normally ask for the credit file because we like to see what's in the credit file. Because sometimes there's like surprises in your credit file. Even our clients don't know that it's there in their credit file, right? The main things that the banks are looking for is whether you have a bankruptcy, county court judgment, IVA, payday loans, and things like second charge mortgages, right? Now, these are things that banks are generally not comfortable with, especially things like payday loans. So those things are ones you want to avoid, because if you have those, that will affect your credit profile. And also, we look for things like missed payments. So if you have missed payments, obviously it affects your credit profile and it can affect your mortgage application. So if you have missed payments, generally if it's old, banks are generally a little bit more tolerant. But if it's quite new, there's a chance that your application can get rejected. And they also look at types of missed payments, right? So if you have a missed payment for a mortgage, banks are a little less tolerant about that, right? Because what they think is, okay, they missed the mortgage, so they might miss our mortgage payment as well, right? But they're a little bit more relaxed on things like utility bills, because what usually happens is sometimes people move house and they forget to inform the provider. Those things happen, right? So they're a little bit more tolerant on those, but especially the financial ones, you have to be very, very careful. So that's why it's always good to look at things like the credit profile. There are a lot of basic stuff on the credit profile as well, which you need to sort of look at, because this can cause problems, right? Like your names. For example, you might have part of your name which is not there, and automatically that may have created two credit profiles for you. So you might be scoring low in one place and scoring well on somewhere else, right? And the bank might be looking at the wrong credit profile. The second thing is like things like your voters register, because sometimes people forget to get onto the voters register, and unfortunately their credit scores are low and it can affect your mortgage, right? So it could be a reason for decline because your score is low just because you didn't get yourself onto the voters register. I think just to add there, not all banks look at the credit files, right? Some banks don't credit score. So for example, there are certain banks who look at, so if your credit score sometimes is not the greatest, banks say, yeah, fine, we are okay to look at it, but they will look at things like your expenses and your commitments, and they try to come with these things. Not every bank does it, but there are some banks who do it. They normally do something called manual underwriting, and with these banks it works okay. So again, credit score is something that most mainstream banks look at, right? So it's very, very important that you get that right. But there are few who may ignore it as well. That's why it's always best to talk to a broker if you have issues like that.
Yeah, okay. Thanks, Sifty. And the third thing we want to discuss is documentation. This is particularly important for those, I believe, who are self-employed,
Yeah.
like the SA 302s, not matching up
Yeah.
with income, that sort of thing. Do you want to give
Yeah.
us a little bit more information on
Yeah.
that?
Yeah, I think it's a common problem with self-employed. I mean, obviously, I'm an accountant, I deal with self-employed quite a lot as well. What usually happens with self-employed is you ask them a question, okay, how much did you earn, right? The answer is like, oh, I take 3,000 a month, right? Take a salary of, say, £1,000 and 3,000 a month, right? So technically, it's 4,000, right? So we multiply that by 12, the answer is 48,000. But then you look at your SA 302s, which is a tax certificate which you give HMRC, you download from HMRC. The number is different, right? So the number is different because what happens is, the client thinks that he's actually withdrawing 3,000 as dividend, but whereas the accountant says, no, actually there's some expenses, so we are netting off some of the expenses, and you've taken it as a director's loan, so there's some adjustments in the director's loan account, So therefore, actually, your dividend is not 3,000, but it's just 2,000, right? So that then there's a mismatch, right? So if there is a mismatch and you apply using that number, you're likely to decline, right? So that's something people like us as brokers, we always check, right? Because you have to go with the SA302 numbers most of the time, right? And if you sort of get that wrong, obviously it'll affect your mortgage application.
Okay, so if you're self-employed in particular, maybe it'd be
Yeah.
better to speak to a broker.
Yeah, that's right. Because they will always check the documentation. Documentation is very, very important. I'll also take another example. When people try to buy houses, sometimes they're short of deposit, so they go and borrow money from friends or family, right? Borrowing is generally not allowed because it's like taking a loan, right? Because that comes down as a commitment. So, I mean, I hear stories say, oh, he gave me 10,000, but, I gave him 10,000 a few years ago. But then you got to back up that because the bank will ask, okay, so show me proof of the 10,000 you gave him 5 years ago, right? So if you get those documentation wrong, you have a problem. And also if you're getting money from families, like if your family is giving you money, you should show an audit trail. How did you arrive at that 10,000? So if you don't have the audit trail or you can't prove that, your application is likely to get rejected, right? It's easier if you speak to a broker or someone, they can guide you on these things, because these could be little things that you could do to avoid your application being rejected, because I'm sure money coming from family is genuine, right? You just need to show the audit trail, right? That's it.
Yeah, okay. And the fourth thing we wanted to discuss is, I think this is probably one of the worst things, when the
Yeah.
lender hasn't given you a reason why
Mm.
your mortgage has been declined. This could be one of the hardest out of them all
Yeah.
because, it could be anything from a discrepancy in salary to
Mm.
information being disclosed improperly to fraud
Mhm.
suspicions.
Yeah.
Have you ever had a customer who's been declined a mortgage without a reason from a lender?
I've heard of a story. Fortunately, we haven't had anything like that, right? So, one of my accountancy clients came to me and told me this story. Basically, in his case, what has happened is, a long time ago, he had a small loan with the bank. Again, he had a dispute with them. And he didn't sort of close this loan. He went out of the country. Few years later, he came. He sort of set up a successful business. He got his first mortgage with another bank, no problem. Next time when he was trying to buy a sort of a different house, the mortgage application was declined without a reason. He came and he told me, look, I've got this problem. Is there something you can help? So, I mean, I tried to dig into it and I said, like, look, banks normally do this if they have something suspicious, right? Then he was thinking about it and he realized, oh, I've got this loan from 10 years ago, which I didn't sort of settle, right? So I think they put it as a black mark. We can't sort of figure out what it is. So you could have cases like that, right? So that bank may have a problem. It's not always a fraud as such, right? Because sometimes banks can't verify something. So if they struggle to verify, they try to get additional documents. If they're not satisfied, what happens is they sometimes say, sorry, decline, but we can't give you a reason. So you have to be a little careful. So if you're declined for this reason, it could go on to a register and it could affect your next application.
What kind of advice would you give to somebody who has been declined already quite recently for a mortgage? Because I know a lot of people think, oh, okay, I've been declined with this bank. I'll just go and apply, with another person or another bank to see if they accept me. But what would you say about that?
I'll be a little reluctant to go to another bank, to be honest, right? Because especially if you are not given a reason, I'd say, it could be for some weird reason, right? So for example, let's say somebody didn't work for 10 years and they started a job when suddenly they earn 50,000, right? So it's a, very decent salary. From zero, you go to 50,000. Bank may feel suspicious, and especially if it's a small company, right? A very small company, they'll feel suspicious what it is. So they could reject based on that, right? So people like that, what they should do is, they should probably wait and show the bank after 6 months that, you are, you're actually earning that money, because, I mean, for 6 months, nobody's going to pay you 50,000, right? So if you could do that, I think that will help, because like I said, this could go on to a register if it's suspicious, right? So if it is suspicious and it's on a register, I think the more banks you go, it could be more damaging for yourself, right? So I'd say in instances like that, try to, obviously I'm assuming all this is genuine, right? So if it's genuine, try to build your profile up, and then go back to the same bank. I think that will be the best thing to do. Try to correct it with the same bank as much as possible
Yeah.
before walking into another bank.
Okay, thanks, Ifti. The fifth thing we wanted to discuss was the property itself and how this may cause you to be
Yeah.
declined for a mortgage. Now, this is something we don't really hear many people talking
No.
about, so
Yeah.
we really kind of wanted to get into this because there's a few things that can cause you to be declined relating to the property itself, isn't
Yeah.
there?
Yeah, that's right. So these are some difficult stuff, right? I mean, if you go on to our WS Mortgages website, we have articles to say what properties you want to try and avoid. For example, you're buying an apartment. Not all banks like high-rise apartments, right? So if you go to X Bank, who doesn't like a building which has 16 floors, your mortgage is going to get declined, right? You probably want to get advice from a broker. So that's quite common that you have high-rise buildings. Some banks don't like ex-council houses. Some banks don't like where there's different types of balconies. Some banks don't like if there's wood beams. So there are a lot of things like flat roofs, right? For example, banks don't like
Yeah.
those. Not everybody does, right? So you don't want to sort of approach the wrong bank, so it could get rejected. Because of Grenfell Tower recently, there are a lot of regulations that's been introduced as well, which has affected some of the apartments. So if you can't get there's a certificate called EWS1. So if you can't get the EWS1, your mortgage is likely to get rejected, right? So you don't want to sort of approach the bank and then realize, oh, I need this certificate and my mortgage is not going to get approved because the certificate is not there. But I think this is a topic that a lot of people don't talk about. A lot of mortgages do get rejected just because of the status of the property, or the property is in a state where it's not livable, right? Banks don't like properties like that. So sometimes, you learn it the hard way. So it's always best to speak to somebody who knows, talk about these circumstances so that your application doesn't get rejected.
Thanks, Ifti. The sixth and final thing on our list is the furlough scheme and drop in
Yeah.
income due to COVID. And this is something that we're seeing coming up more and more these days. So,
Yeah.
Ifti, do you want to tell everyone a bit more about how being furloughed may affect your mortgage application?
I mean, unfortunately, that's kind of the situation in the country. We're all hoping that it'll get better soon, right? And there is signs that it's getting better as well. But furlough is something that banks are a little careful about because they're worried that people may lose jobs at the end of the furlough scheme, right? But I think the furlough scheme, as of now, it's supposed to go on till April, but after April, we don't know. So banks are worried that people who are on furlough may lose their jobs, right? There are some banks who are accepting people who are on furlough, but they might need letters from employers to say that there's guaranteed work after, say, April. So you might want to work with some of those banks, but it's a little bit more tricky when it comes to self-employed. Because if you're self-employed and you're on furlough, effectively you're telling yourself that you're not working, right? So if you're not working, that affects your income, right? So if it's affecting your income, it could affect your mortgage application. So with self-employed and furlough, you have to be extremely careful because it's like a grant, right? Furlough, from a bank's point of view, it's a grant. So if you're taking a grant, you have to be very careful about it because banks think, oh, you've taken money from the government and you might be desperate. That's why you're doing that. So furlough can be a bit of a problem, and that's one of the main causes of decline these days. Because quite often people say, okay, they're on furlough, but when they come to talk to you, we ask them, okay, how much do you earn? And they go, oh, I earn 30,000, right? But then when you see the bank statement, you suddenly see that the furlough payments coming in, right? So that's not great because there's a good chance if you go with a mortgage application saying you're earning 30,000 and you're on furlough, if the bank doesn't like furlough, you're unlikely to have a mortgage, right? So that's the problem. But with self-employed particularly, it's a little tricky because usually banks, if you're self-employed, they usually look at your tax returns or your company accounts. They do look at one of the two, right? Or sometimes even both. But nowadays, because of everything that's happening around, right? Banks are a little bit more careful because they want to see whether your income has actually been affected. Because your latest tax return from April, right? So it's about 10 months since then, right? They want to look at latest information. In the past, they didn't, right? But now they look at latest information. So if you're in an industry like, say, running a pub or you're running a hairdresser, who had to close down because of the lockdown, you are likely to be affected. So we see some of those applications being rejected. So that's why it's always good to talk to a broker or an advisor who can advise you on these things before you make the application, because the last thing you want is your application being rejected. So that's why you have to be a little careful with that.
All right, well, thank you, Ifti, for that great advice. I just wanted to put a little reminder out there that these points may or may not be applicable to all borrowers, so talk to an advisor if you're unsure about whether these suggestions are suitable for you. And if you don't have a broker, I will leave our WS contact details below, as we are always happy to help. Another reminder that a mortgage is secured against your home and it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today, Ifti. We'll be back again next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.